Welcome. Good to have you with us, Rachel, and Mike as well. The market seems to have broadened out a little bit. It's not just the Magnificent Seven anymore. I take it you would see that as a positive, wouldn't you, Rachel?
Yes, Tyler, and thank you for having me, and happy holidays to everyone. It definitely looks as if this broadening is providing that powerful, positive feeling that perhaps the market breadth will sustainably broaden. We have had a few head fakes along the way as the market has powered higher this year, but we're seeing it on many different angles. You're seeing 7 out of 11 sectors having really strong positive upsides with their 50-day moving averages being extremely high. You're also seeing confirmation from not just technology, but you're seeing some trade-off there where technology continues to do well, but you're also seeing a leg up in some of the other sectors as well. So that broadening does bode well for us as we move into 2024, as long as that can continue.
Mike, I want to turn back to what Dom Chu concluded his last hour with, and that was the notion, I think Jeff Kilberg mentioned it, that perhaps this year-end rally has borrowed a little bit from 2024. I mean, to the extent that is a legitimate case, is that the case this time?
Yeah, I mean, it's always tricky, Tyler, because typically, if you look historically, well, what happens after a really good year in the markets actually tends to be followed through to the upside. But in the very short term, I do think there's a possibility that we really have kind of emptied the tank in the near term. So you have this tendency in the last several days of December to be strong. But when the market and sentiment have been this high for a little while, but going into that period, sometimes there's some give back. You have some of these extreme readings in terms of how far and fast the index has come that suggest even if we get further upside from here, usually it's not like it goes up and doesn't look back. You have to kind of regain those points again after a pullback. So I think you have to be cognizant of all of that while realizing that if you go out a few months, most of the momentum signals we've gotten here and most of the macro fundamentals, that storyline seems like they're relatively supportive of the trend.
Rachel, we got earnings from General Mills this morning. The miss on organic revenue, flagged slower volume recovery, cut full-year guidance. And this comes at a time where, in general, across the sector, you're seeing a lot of commentary on the state of food disinflation, in some cases even deflation, and whether you're going to see these lower prices actually help to bolster volumes. Doesn't seem to have been the case for General Mills last quarter. And it raises a key question, and that is, if you continue to see disinflation taking root, as everybody's focused on the Fed next year and the possibility of rate cuts, does it become a double-edged sword when you do look at companies and their earnings in 2024?
So I agree. Disinflation can have the same unpowerful impact as inflation had to profitability in 2023 for companies. I think, again, it's going to be a market where you have to look at each company and not just necessarily look at the dynamics of one sector, but really look at the fundamentals of each company in that sector. And, you know, the world where General Mills lives is the same world where Pepsi lives, which is a company that we hold and have upgraded in both our core equity portfolio and our sustainable dividend portfolio for the growth and income components that they provide and the pricing power, quite frankly, that they continue to have. Again, with Pepsi, you're seeing double-digit organic growth, double-digit earnings growth, to the contrary of what you just mentioned with General Mills. And you're also seeing a dividend of 3+%, which is attractive with a 10-year that's declined below 4 now, and the history of a 51-year dividend increase with Pepsi. So again, polar opposite, same sector, really needing to, as an investor and an analyst, look under the hood and make sure that the company in that sector has the positive characteristics.